Hello traders, this is a live scalping trading the Dow Jones Index. I want to buy the Dow Jones right now, and hold on please, I want to put it a little bit there at 25938. All right, that's my limit order there, 25938. Willing to buy the Dow Jones. Okay, that order will be filled as soon as the price reaches that level of 25938. I'll wait till, hold on please, it's going back down. We will see whether it's going to come back up to fill that order at the 25938. All right, as always, when we are live recording, it can take a bit of time. No one knows how long this will take. All right. My apologies to trader because my voice is a little bit funny because I'm sick at the moment. But God willing, I will improve. All right. Okay, so price going down. It's going down now. Okay, so I'm not yet in that trade. Just waiting. But I want to show you what I'm trying to play here. Why I'm thinking to buy in that zone. But I'm going to bring you quickly to the 4-hour time frame. Here we are on the 4-hour time frame. So I want to play with a Fibonacci pattern. So for those of you that are very new to the topic of Fibonacci pattern, or if you have been reading, all right, some useless, some useless theory about the Fibonacci pattern, I invite you to also look at www.dayprotraders.com and read a little bit more about the Fibonacci pattern. So there should be some condition, I say two conditions, before we will start thinking of a Fibonacci pattern. All right. So the first condition is that there must be a trend. So you can see here, price went up from point A, from here to here, and then it pulled back without canceling the trend. Now it start going up. So what do we do? Okay, so I'll put, we call this point here, the point X. I'm speaking, my apology trader, if you can't hear me, it's because I'm sick, as I said it before. So try to be gentle with me for the first time in your life, all right? Instead of kicking me all over the place, traders. All right, so that point we call it point X, this is the point A. A for alpha. Alpha and omega, okay? You still there? Good. Don't go away. Or don't let anyone disturb you. So this point here, we call it what? That's correct. We call it point B. B for Bravo. Am I speaking with my Texas accent today, or is it my Bombay accent? All right. So here we are. So will it form? That's a question. Will it form a Fibonacci pattern? It may not. So as the pattern is developing, as the pattern is growing, so to speak, it does not mean that the pattern will be completed. This is one thing we need to understand. So we talk about, when we hear the word pattern, we always think of the location, all right? But what I say to Fibonacci pattern trader is that when you hear any Fibonacci pattern, you want to check where and do the verification of the pattern. The first two conditions must be in place to validate even the starting point of the pattern. So as I'm talking now about a possibility of a Fibonacci pattern, it's no guarantee that the pattern will be fulfilled. But if this is it, if the price start behaving like it's about to form the Fibonacci pattern, well, probably I will be one of the first traders to take advantage of it, okay? So that's why I'm putting those labels there. So There was a price move up, and then we see this sharp move down. It did not cancel it. It bounced up there. So I can call this point here X, at this point A, at this point B. We know that we are now waiting for which point? We're waiting for the point C. C for what? Charlie. All right. Not C for chicken. All right. I know you are hungry, but we are not going to say chicken. It's Charlie. All right. You can say C for chicken curry, chicken vindaloo, chicken mandrash. Oh, yes. I like Indian food. You can bet on it. Okay. Now, here we are. All right, so here we are. So there is a competition between the Indian and the Pakistanis because apparently one of my Indian friends told me that, in fact, the Pakistanis can cook better. Is that true? All right, now there is a competition going on now. Okay, so here we are. So is it going to, so we know that the B to C can be from 38.2% up to 88.6%. Fibonacci retracement of what? AB. So if you don't understand what I'm saying now, it means that you need to go to www.dayprotrader.com when you are okay. No one is disturbing you. Click on okay. Gartley pattern, bat pattern, butterfly pattern, all right. Gartley pattern and so on, crab pattern, so you may understand more the Fibonacci pattern. As I said before, the price action B to C, the retracement to the AB. So we are comparing this move down in relation to this move up. That's what I'm saying. BC in relation to AB should be between 38.2% and 88.6% Fibonacci retracement level. So what I'm saying now is that Dow Jones can go down as it's going now, can continue to go down. So it's now below the 50% level. It can go down all the way to this level here, which is the 88.6% Fibonacci retracement level. Repeat, if there will be, if is so important, if there will be a Fibonacci pattern, if there will be. So far, we are just looking at it, monitoring it. That's the good word for it, all right? Keeping eyes on it. You remember when you are the elder son in the family, your mother would say, keep eyes on your brothers and your sisters, okay? That's what they tell you usually. So you become like the supervisor of your younger brothers, younger sibling, okay? So here it is. So it can go down all the way here. But does it mean that it cannot go further down? It can. That's what I'm saying, that when the pattern is being formed, the pattern can be completed or may not take place or may fail, or the price may print something completely different that we were not expecting it. All right. So this is my expectation. So that was the reason, okay, why I was trying to position myself here near the 50% zone, because a lot of Fibonacci traders like to buy near the 50% level. So instead of jumping on it, all right, you understand? This one trick for day trading. Instead of jumping on it and just buy, like if I did just buy like this at the market price, you can see that they will be pushing me down and I will be sweating like a donkey. Yes or no? And I don't want to sweat like a donkey. The donkey will work hard and will not get paid. And I don't want that. So for those reasons, I prefer to use a limit order. So I want the price to go up and fill the order. And here it did not. It said, George, I'm not coming up yet. I'm still going down. So this order here is not filled. Right? So I can look back again. So I'm going to drop down. So I'm now on the 3-minute time frame. There's something interesting here I want to show you. So I will be looking for another point where I can get into the trade. So I'm now on the 3-minute time frame. As I told you, you see that the price gap up. This session, this is the session I'm watching now. This session here. Can we put a line there? This session. You see the gap there on this 3-minute time frame. I'm hoping, this is a hope. So a gap here. You see this session? A gap. And in fact, we have 2 gaps. So this is the first gap we see here on that 3-minute time frame, and then with this wider gap here. So there is a lot of gap here. So now it's crossing, the price crossing the median line of this wider gap here. Well, and there is another gap here, and the median line of the second gap roughly somewhere. You see, all right. What am I? What am I? Yes, 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 somewhere in this zone. That's the second media line of the other gap. Okay. So those are so I'm interested. If it's turning around here, I'll be interested to buy there. I'm going to put red line there so you can follow me. If like you see how he was doing it here before, where I was trying to buy before, I want you to understand this. You see this point? So the price was going down, going down, going down, and then we have one candlestick bar up. You see? So I put my limit order above the high of that candlestick bar, expecting it to go back up and fill that order. It didn't. So what I'm saying to you, the same thing I'm expecting in this level of 25871 now is crossing it. The market is very bearish today. And if we come to the next one, I want to monitor it and see whether I will have a similar reaction as we did have one here. You see here? So now it's now approaching the station, so to speak. So let's zoom into it. How long have I been talking to you now? So the purpose of live recording, all right, it's not a public show now, all right? It's not to show off. It's not to just talk. But sometimes it helps traders, some day traders, to understand few things and to correct their mistakes. That's the whole idea about it. So that's why when I'm recording video, live video, I want traders to see the losing trade and to see my weaknesses, the pressure, all right, everything. So when they are going through the same thing, they don't think that, oh, I am the only one going through this, or I am a useless trader. So you see the reaction here, the second gap, the median line of the second gap. You see, this is the median, roughly. Yeah, this is the red line here, this gap here, the median line. So it crossed the median line of this wide gap. So I'm going to remove that, or we'll leave it there. Let's leave it there for now. Now, there is a reaction there. If I bounce up a bit, I'll wait. Because why am I trying to buy when the market is bearish? Did you ask that question? Oh, yeah, that's very interesting. Okay, what I'm trying to do now, if you watch the time of the day, is 45 minutes past 7. Now, this is not the best time for day trading. But the only reason why I'm sitting here, first, I'm sick, so I try to do something to make myself better. Now, what I'm trying to do is that everybody was selling the whole day, isn't it? All right? So in less than in 1 hour, 15 minutes, the market will be closed. So all these bearish traders, some of them will close their trade. So I'm waiting for those bounce up. I'm looking for a convergent point. Now, you don't understand what I'm saying? I'm looking for a convergent point. So where do we look for a convergent point? We can use price target. So here, one can see that, George, there was one ABCD chart pattern. So this is to find the various price target. All right, so somebody became A, B, C. And they will say D down. So there is a target there, you see? Now you see the market principle, what I was telling you, that the price does not go up or down for no reason. It's always headed to a specific target level. So even on the 3-minute time frame, people are paying attention to the target. So this A, are you with me? Are you still there? A, B, C, D. Now there is a target there. All right? As I said to traders before, there are many ways traders set their target. So those are some of the traders, they took a little bit of profit here. But I'm not going to force it because I'm waiting for that bounce up. I'm looking for a conversion point. Unless today, they're not going to take their profit. There are some days I want to show you quickly on a daily chart. So don't think that because the market has been bearish, that you see this particular day, they sold it down, no bounce up. Look at this one. Here, this is the good one. So they sold it the whole day, but there was a bit of bounce up. This is what I'm looking for. I'm looking for a profit taking, a convergence signal. You see this also? This one was messy. I don't like those candlestick bar. They are very wicked. I will be talking about those candlestick bar for traders. And what I would say to traders is that if a trader was asking me a question yesterday about how to achieve consistent winning trade, now I'll be recording a video about that. Is the one thing I will say to that trader if he's watching this video, is TSCWSY is your trader, is to develop a strategy of taking profit. A particular day like this, sometimes a trader may sell, but may end up losing, which means if he or she is somebody who is not taking profit when it's due, that trader, so you sell, it goes down the whole day, but by the end of the day, it pushes you under pressure and you end up taking loss. This is very bad. So one way to achieve consistent winning trade is to know when to take profit. So until you bank that profit, it's not a profit. So if you're going to talk about consistent profit grabbing, so to speak, in the financial market, you have to also bank it. So you have to start banking profit. Now, what I've noticed that a lot of traders that have been losing a lot, at one point they start developing a good habit of taking profit or securing profit carefully, because they hate the law so much to the point that they do not want to lose anymore, and they want to take something. It's like somebody has been taking your money day in, day out, and you make a decision that next time this guy is not taking any of my money. I'm not going to let him take a dime or a penny from me. So you are ready for it. You have a strategy in place. So you start taking profit. So the first step for consistency, so this is what we are talking about. See now, so he came down here. Now I'm back on the 3-minute time frame because I'm explaining other things. Came down to the 3-minute. So now there's a target here, as I show you. This is the bounce I'm looking for. So what I'm going to do, I'm going to move this here again. Just there. I was lucky there because if I did place it there, they would take me already into this trade. So now they start, they show me their hand. So they start going down. I put it there. So going down, going down, going down. We are in a target zone. Now this bounce up. So these are people taking a bit of profit. So I'm going to place that order there carefully. Hopefully they will be nice to me. Now what I'm doing, it does not mean that it will be successful, but it's a little bit clever method that I'm using to control the risk. It can end up being a losing trade, but I want to do at least the right thing before, if they're going to kick me out, at least I won't be upset with myself. That's what I'm saying. So that order there, I'll leave it there, all right, near that median line at the 25866, a limit order to buy the Dow Jones, looking for a bounce up, all right, in a downtrend. I'm looking for a reversal at a conversion point. This is it, all right. Am I talking too much? Okay, what are we going to do now? Okay, because you know now my intentions, all right, and what I've been playing here. I've been talking to you now for 18 minutes. Now, traders usually they want a video to be like 50 minutes, 70 minutes. Now, when we are doing a live recording, you can expect up to 30 minutes at least, minimum, okay? All right? So there was a time before, I think in 2010 or 12, when I was recording a live video, when I placed a trade for the Dow Jones, and the price just ran fast, and it was the quickest, shortest a live trading video I ever recorded, all right? So we will see. All right, now, okay, so I want to wait till that order is filled. Hopefully they will do that without wasting too much time, all right? Come on, we want to save time. Now, I try not to talk too much to the chart, okay? Because the reason is that when I start trading fast, I talk too much to the chart, and I say, come on, come on, come on. And I get upset with myself. And I don't do that anymore because the chart does not listen. You have to listen to the chart, all right? Okay. That's it. I'm now in that trade at the 25866. I need to remind traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. Okay, it's primarily for the TSTW, SY8008 and 24 traders, all right? And our subscribers, of course, okay? So I'm now in a trade, so I'm going to use, for this one, I'll use 20 pips. So let's see whether 20 pips will be good. 46, yes. It's a bit too close, though. All right. Okay. Hopefully they will be nice. Otherwise, 20 pips, yeah? Everybody agree? 20 pips. I'm watching it. So if they want to kick me out, I'll move my stop loss. Have I said that I'm going to move my stop loss? Yes, I will. I will move my stop loss 7 pips, or then I'll move it 6 pips. All right. So do you understand what I'm saying? So my stop now is at 25846. All right. If they want to put me under pressure, I'll move it down 6 pips more because I don't like the way I'm too close to this tail here. All right. This is not a good place to play the stop loss, okay? So if they are coming a little bit too close, I'll move it down. In fact, I'll show you where I want to put it. Okay, better do it now. To 40. That's it. So 26 pips. So you may say, Joe, why are you moving your stop loss? I do move stop loss sometimes when I'm under pressure, okay? Now you see it, okay? Now, that's it. So I'm now happy because I don't like it the way it's too close to this one here. I didn't like that. So I was trying to play safe. Sometimes you may work beautifully because 20 pip risk is better than 26, yes or no. But now they want to put me under pressure. I know that I suppose for the Dow Jones, it's better to use 30 pips, all right? In fact, 30 pips stop loss minimum for Dow Jones. That's what myself I prefer to use. But for this trade, they want to kick me out. Should I move it again 4 pips down to 30 pips? I will do that. 30 oops, I'm now out of that trade. Okay. That's a losing trade. Okay, that's a losing trade. All right. 26 pips the loss. Okay, what I'm going to do before they run away, place my order there at 25850. That's why I say 30p will be better. 25850. Using again, I'll use. Hold on, please, traders. As you can see, I'm back again inside the trade, 25850. Again, I'll start with 20 pips again. 20 pips. 20 pips, all right? Stay with me, please. You can feel the pressure, yes or no? All right, good. Now, let's see. So now, again, back. So first trade, losing trade. Let's put it here. That was a losing trade, George. 26 pips, okay? All right. So if I did use my 30 pips for the Dow Jones, I would be still in that trade, but I lost 26 pips. All right, okay. I'm now back into that trade, and I'm using again 20 pip stop loss instead of 30 pip. I decided to use 20 pip first because of the time of the day when I'm entering the trade. It's not a good time for day trading. All right, so I'm ready to move my stop loss one more time, but we will see. All right. Now, where are we now? So we see the reaction here. This is one up, one down, candlestick bar. This candlestick bar is very important for us. If it is bullish, that will be very encouraging to us. We will see. All right. So that's my entry there. and my stop loss is this one here. Color it in pink. That's it right there. I put here 26 pip loss. 26 pips. Are you watching the time? Well, so I've been talking to you now for 25 minutes. This is what I'm saying to you. Live recording can take longer than normal. So far, I have not paused the video. Usually, I pause the video when I'm doing a live recording to save time. But so far, I haven't paused it. All right, let's see what's going to happen. All right. Back below my entry point. Still under pressure. Going to look on the, quickly go on the 50-minute time frame to see the 50-minute time frame. Can you see buy? It's not yet closed. That's where everything's going up and down here. Should I move my stop loss? Okay. Can you see that? That's my stop loss right there. I'm not going to move it again. I'll leave it there. Now this is not looking good. That this is going back. The price went back down. I'm going to go to. I want to show you something on the. Let's see. This is it now. This is a good time to buy now. Okay. Okay, that's another 20 pips loss. I'm going to buy Dow Jones one more time for the third time. I'll buy it at 25851. That's the limit order there. So you may be wondering, just okay, that's it. Back in the trade. Okay, I'll use again 20 pip for this one again one more time. 20 pip one more time. So for this stop loss, you may say, Joe, why didn't you use 30 pip at the beginning? Well, I don't know why. I don't want to. All right. Okay. Moving my stop loss to the new place. It's now at 31. We will see whether by the end of the day I'll get paid or not. That's correct. That's my new stop loss. 20 pip again. So this time, okay, 20 pip loss one more time. That's 46 pips. Okay. All right. Now, this is looking good. Now, what I'm going to do, because I have two losses, okay, I'm going to manage my trade now. Careful traders. I would like to buy here. Hold on, please. I'll check the color of this one. I would like to buy here. Again, I would like to, this is another limit order to buy at 25871. Because I have two losing trade, I'm trying to recoup my losses. So another limit order here. Hopefully we'll pull back to fill it before it continue to run away. This order here is not yet filled. Okay, stay with me, please. The time in London is now 1 minute past 8 p.m. All right. And I have been talking to you for 29 minutes. All right. So what's going on now? Where are we now? With the price now at 25885. Very good. You see, this is working beautifully. This trade is working beautifully. All right. 37 pips. All right. So I'm closing this trade right there at 25891. A profitable trade of 40 pips. All right. So profitable trade of 40 pips. Let's put it there. Are you getting something? Are you learning from my mistakes? Or are you just laughing and say, Joe, you have a losing trade, blah, blah, blah. So but I want to buy again one more time. So I'm still on the 3-minute time frame. Okay. So now this one is a winning trade. So we have to put it in green. All right. So there we are. So that's it. All right. Did you see it? Do you remember this order here? I mean, this trade down, limit order 25871. Do you see? This is what I'm talking about. I'm now in this trade. I'm going to be very careful now. What is 20 pip will bring me to 51. I don't like that. I will use for that trade. Yeah, 25. 25 pips. Instead of 20, I'll use 25 pips. Are you with me? So that's a new position. 2, 5, 6. 6. Bear with me, please. In train. Yeah. Okay. Are you watching the screen for me as I'm looking down on my keyboard? The pressure is on. You want to day trade? This is what you get. All right. 25 pips. All right. So new trade open, 25 pips. So what I'm going to do, because of the time of the day, I'm going to So what am I doing? This one. This is a profit target that I'm setting for myself to grab from the market another 40 pips. So 25871 entry, exit at 25911, taking another 40 pips. That's my target. So I need to manage this trade carefully. All right, this one. Okay, I'm still on my 3-minute time frame. So remember my stop loss here. This is 25 pips stop loss. Let's put it there. Now, you have to understand that when I'm trading Dow Jones, I like to use for day trading, right? Day trading Dow Jones, 30 pips for Dow Jones. That's the average stop loss that I often use. Sometimes I use more than that, or sometimes I use less. As you can see, sometimes I'm playing that game of not revealing straight away my intention in relation to the stop loss. Now, so that's 33 minutes so far. Should we pause the video, or you want to watch in full? All right. So I'm going to place. Can you hear me? Because my point to trader, if you can't hear me properly, it's because I told you. All right. I'm not well today, so this is trying to prepare myself. If I have to pause the video, that's the vertical line. If you're going to pause it, so we want the price to go up more. I often do this, all right, and so do you understand what's happening here? So what I'm doing here is a little bit of mind game. 34 minutes because I don't want it to go over 40 minutes. All right, that's why I'm watching the time carefully now. I may have to pause the video, but in my mind, I prefer that you watch it straight away. But the price is slowing down one more time, and it will be nicer if the price continue to go up and hit my target very fast so that we avoid that the video is too long. All right, so here we are. So far, you see, I had taken 4 trades. All right, 4 trades. First 2 trade was losing trade, and sometime this was happened. They take you out, you come back again. They take you out, you come back again. And now altogether, I only lost 6 pips because I lost 46 and I won 40. So my loss for today so far is 6 pips. Now, this is the trade that will make my day for me. All right. So now I hope you get something out of this tutorial, because sometimes trading now. Personally speaking, talking about myself, if this one also was a losing trade, I will give up on. I will just walk away. All right. It happens sometimes when I will come back the 4th time, but usually 3 times the market is telling me, George, go away. I'm not in a good mood today, and I understand that. Okay, very nice. Okay. So this is it. You want a consistent winning trade? Have a strategy to grab profit. All right, grab profit. So like this one here, you see, when the price came from here to here, if I did not take that 40 pips, it won't be there. So if I didn't take that profit, I'll be still in one trade waiting for it to hit a higher target. But this one is bank, is protecting, is reducing my first losses. All right, so 6 pips, not bad. All right, okay. So this price move that we see here, this is what I'm looking for, the bounce up. The bearish trade that was selling the whole day, the price now at the target. They are not stupid. Most of them will take a little bit of profit. This is what we call convergent trading signal. All right. So, and at the same time, as I show you on the 4-hour time frame, I'm in my mind, I'm also thinking of what? A Fibonacci pattern. All right, so this is the point C. If it turn around here on the 4-hour time frame, if okay, continue to go up, we will call that point C. All right, and I will be looking for point D for delta. I can put it there now because I want to keep my eyes on the price on the 3-minute. Okay, so if the price pull back a bit to my entry here is now 258.80 instead of going up. So are you getting it now? So the bigger picture, this is what we are talking about. The long term, the short term, so the medium term, all right? So a pattern, a Fibonacci pattern may be formed. I'm using may fail or may continue. If it continue to go down, that will cancel the pattern. But if it turn around here, start going out, we will start thinking, this is it, thinking, expecting a Fibonacci pattern. It doesn't mean that a Fibonacci pattern will definitely take place, but it's in somewhere in my mind. All right, so you get it done. So the condition are fulfilled, price went now, pull back with our concept SA, A, B, C. All right, now will it come to a target level? So this retracement here, I'm watching the, hold on please, because I need to take my profit, yes or no, okay? So the profit is at a 25911. As I'm talking to you, I need to keep my eyes on it. So going back to the 4-hour time frame, okay, are you with me? So I'm going to remove this, we don't need it anymore. Okay, all right. So now you see this retracement. We need, if you are Fibonacci trader, we need to pay attention to it. So we want to see the retracement of AB in relation to SA. This is a very shallow retracement. So it's less than 50% Fibonacci retracement. So, all right. You can see that I didn't put it all the way here because it starts going down properly from here. Some trader may put it there up. That's okay. So if you see that, you can see that it's a retracement to the 50% Fibonacci's retracement level of the price move. Okay, from the top all the way down here. So the first pattern that is coming to our mind is what? The bat pattern. The bat pattern. Which other pattern can we think of? That's correct. Which one? The crab or the butterfly? The crab pattern. Because of this retracement, two Fibonacci pattern is coming to our mind. The first one is a BAT pattern, BAT, Bravo Alpha Tango. And the second one is the crab pattern. All right. So for the BAT pattern, the target for the point D is somewhere here at 88.6% Fibonacci retracement. If I put my drawing from here, but I'm a bit reluctant to put it there. So that's the 88.6%. But personally, I don't want to put it there. Some today will put it there. I prefer to put it here. So in that case, my target for point D will be here. Right there at a 27053. Are you watching the price for me? All right. Does it mean that the price will do exactly that? No. This is a kind of preparation, looking ahead. You are driving, you are looking ahead, isn't it? Is it curvy ahead? Is it straight hold ahead? And so on. Preparation. This is it. So sometimes they say, oh, you said that this will happen. No. We are expecting it. Now we wait for the confirmation. All right? And then the signal. Expectation, confirmation, and signal. Don't buy or sell without signal. Okay, so that's the target for the BAT pattern, all right? Conservative target. All right, if you put it all the way here, it will be somewhere higher. Now, for the crab pattern, it will be beyond that level. Okay, 161.8 beyond. Okay, 161.8 Fibonacci extension level of AH. Right, those are just speculative. But before this target of 88.6%, all right, other traders, as the price coming to the 78.6% Fibonacci retracement level of that SA, though the target for the BAT pattern is this one here, other traders will be thinking of Gartley pattern. Now, we know that the Gartley, in this case, normally this is not Gartley pattern, because the Gartley pattern, the AB retracement to the SA should be exactly 61.8% Fibonacci retracement of SA. But still, though the condition for the Gartley pattern is not fulfilled here at the point B, as the price going up, the target for the Gartley pattern will also be a challenge. So price coming here, there will be some people taking a profit target at the point D for the supposed to be a Gartley pattern, though we are not dealing with a Gartley pattern. And then if you place the ball and find a support, we'll be talking about a crab pattern and other, okay, key level ahead. As I'm speaking to you, the price turning around here. Should I close that trade and go home with my 6p loss? Or should I take my, I got now 14p profit? I don't want to take 14p profit. I can take it, but, well, we give it a bit of time, okay. It's now 16 minutes past 8. Like I say to you, it's not the best time for day trading. What should we do? You push it nicely, we thought you're going to hit it by the stopper. Pulling back a bit. All right. Okay, 43 minutes. This is what we are talking about. All right. Should we pause the video? All right. I said everything that I need to say now. So, okay, what I'm going to do now, okay, let's pause the video to avoid that it's too long. It's taking a bit longer now. Okay, I want to tell you something, okay? Hold on, please. In order to control the risk, bear with me, please. You see, this is my entry point. The price now 10 pips above my entry. I'm going to move my stop loss 71. Okay, I'll bring my stop loss to 10 pips. All right. So that's not too bad. To reduce. Are you getting what I'm trying to do? Okay. So So I'm trying to reduce my risk exposure. Okay, cutting it down. From 25 pips, I cut it down to 10 pips. So if the price goes below my entry and continue to hit this level, that will be a capitulation, price reversion instead of going and hitting my target, and that will be another 10 pip loss. So if things stand as they are today, they are now, that will be 16 pip loss for this trade. So 45 minutes gone now. Should we pause the video or should we continue with the discussion? That is the question. Hold on, please, traders. All right, so here we are. This was happening now. There was a bit of issue with the recording. What has happened here? So I hope you can see it. So I thought it was a recording, but it was paused. So this is what we got here now. Still trading the Dow Jones on the 3-minute time frame. All right. So what I was saying to you is that so far for the day, we are in minus 6 pips. Okay, so in exactly 35 minutes, the market will be closed. All right, so all right, so what I'm going to do, because it's now 48 minutes since we were recording this video, I'm going to pause the video now and come back to it if there is something interesting happening here, okay? So pausing the video with your permission. The time in London is 25 minutes past 8, all right? And the vertical line is highlighting the point where we are pausing the video. My entry is at 25871. All right, I move my stop loss up, reducing my stop loss at 10 pip, stop loss at 25861. Pausing the video. Okay, traders, in exactly 8 minutes time, New York will be closed, all right? The time is now 52 minutes past 8 p.m. So I'm still in this trade, and it's taking a bit of time. We paused the video here. You can see that he was hanging around here. He didn't disturb at all my stop loss. So we want to give it a bit of time and see how far you go up. And then we just close the trade. And right now, I can close it now, but I'll let it run more. So far, we have a 6 pip losing trade, 6 pips, a loss, so it's not too bad, okay? So all I was trying to do is to pick up a reversal signal here. And the first 2 trades were a little bit nasty. Now, I have to agree that I could have used my original 30 pips that could have saved me all this trouble. But sometimes I don't like to reveal straight away my intentions. So instead of using 30 pips, I decided to use 20 pips, and then they take me out, then I have to take another trade, and that's why we end up with 46 pip loss. But finally, the third trade was successful, 40 pips. I was expecting that this one will pay me another 40 pips, but it's dragging on, and just too slow, too slow. What has happened is that the bullish trader disappeared. Normally, when we are talking about convergence signal, the bearish trader that was selling before will be coming out of the bearish trade. So bearish trader is coming out of the trade. They must buy to close those bearish position. But what we are facing here is that the bullish traders are absent. They went home. They didn't bother to buy because the market was so bearish that the bullish traders stay away from the market. So what is happening here is that it's only the activity of the bearish trade that were coming out of the trade, because if both bullish and bearish traders were trading here, will that bounce up will be rapid, will be very fast. So, but today was a very bad day for the bullish traders. So they are not hanging around to take it from the bullish traders now. So that's why it's taking so long. Normally, a convergent trading signal should be very, very fast. All right. So we got 5 minutes left. What should we do? Should I close it now or should I leave it run? Well, it's now at 91. That's 20 pips profit. That will give me 14 pip profit. So this is a bit challenging trend. Why was it challenging? First, the time when I came into the market was not a good time for day trading or scalping. I'm aware of it. So this is it, all right? So if you are trading during the gap period, it's a speculative trade. I'm aware of it. I decided to trade it. Second thing, because I was trading outside the best time of the day, I didn't want to use my original 30 pip that I often use when I'm trading the Dow Jones. So I was a little bit defensive. I didn't want to use 30 pips because 2 times 30 will be 60 pips straight away. So I was a bit reluctant to use my original 30 pips. But I end up losing the first 2 trades, giving me 46 pip loss. But the third trade was good. The fourth trade is dragging on too long. I set a target here. We now got 4 minutes left for the market to close. Are they going to be friendly? But all in all, my intention for recording this video is to show traders some of the things that we face sometimes when we are trading. Okay. Now, okay, so we got 3 minutes left now. Okay, if he's coming back down, what I'll do, okay, I'll show you now. I'll just move a bit quite close. 87 to secure some gain. All right. So that will give me 16 pip there. When I put it down at 87, I enter at a 25871. That's 16 pip as secure now. So I leave it there. I'm going to close it now in a minute. So in fact, that's it. 94, 25894. That's it out of that trade. Okay. All right. So it's not too bad. That's 23 pips out of that trade because the bullish traders were absent. They ran away. So put here 23 pips more. All right. So quite. Let's see. Okay, this one is green. Good, good. So you get in. I hope you have learned something from this video. We put into use to improve your scalping and your day trading. All right. So all in all, so this was what? 46. And this is what now? 63. All right. It's not bad. Not bad. So until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about a challenging, convergent signal, scalping the Dow Jones during the gap period. If you have any question or suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. If this video has been useful to you, please give us the thumbs up. If you dislike it, be sure to mark it down. If you think it's an essential tutorial, feel free to share with your friend on the social media. Subscribe to our YouTube channel. Our YouTube channel for scalping is Day Pro Traders. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Happy trading to you all. Thank you for watching. For 56 minutes, you see now? All right, 56 minutes, very long video. Thank you.